The Australian casino industry witnessed several headwinds due to the pandemic, and repeated lockdowns have put a dent in the performance of these stocks. However, with vaccination in full swing and the reopening of international borders around the corner, the tourism and recreational activities are expected to rebound soon. Hi, I'm Sage, and today we have got a few leading ASX casino shares to eye in November. Let's get started with today's Hot Performers Show by Kalkine TV. First up is Ainsworth Game Technology. Ainsworth is an ASX-listed gaming firm that develops gaming machines and related equipment supplies. The company's half-year report says its acquisition of MTD Gaming has had an immediate and positive impact on EBITDA. MTD is a developer and supplier of poker, keno and video reel content. It provides Ainsworth access to multi-game and video lottery terminal markets and expands its existing hardware offering with the Apollo cabinet it manufactures. The gaming company delivered a strong financial result during the financial year 2021. According to its annual report, company's sEBITDA stood at $15.5 million, which is a significant rise from $5.8 million in 2020. Ainsworth has maintained a strong balance sheet with good net cash positions at $5.1 million. As the market recovered from the pandemic, the company's revenue increased by 7%. The company is expecting good growth from new partnerships in the financial year 2022. Let's move on to the second stock, Crown Resorts. It is one of the largest entertainment groups in Australia, with a market cap of around $7 billion. An Australian inquiry recently declared Crown Resorts unsuitable to hold a gambling licence in Melbourne, but allowed it to run its biggest earning casino under supervision, raising hope for its earnings and takeover prospects. After months of hearings in which the casino operator was accused of enabling money laundering and misleading regulators, a Royal Commission called Crown's actions disgraceful in a report published on Tuesday by the Victorian State Government. The company's financial results have been impacted by several headwinds on the back of COVID-19. According to its annual report, the company reported a net loss after tax for the year ended on 30th June 2021, and Crown's EBITDA also declined by 52% and the statutory revenue fell by 31.3%. But the company is committed to regain its momentum by the financial year 2022 with new capabilities and enhanced resources. Next up is BetMakers Technology Group. And this is an ASX-listed wagering operator with a market cap of $1 billion. The board of BetMakers recently announced received notice outlining regulatory frameworks for fixed odds betting to commence on horse racing in New Jersey. The company will update the market regarding when it intends to begin with its partners and the facilitation of fixed odds betting in New Jersey. According to its Q1 report for the period ending 30th September 2021, the company's cash receipts increased by 135% from the previous quarter. Though net cash from the operating activities was maintained at around $1.5 billion. With expanded customer pipeline, the company expects a continued growth during the financial year 2022. And we've reached the time for a small break, but do stay tuned with me on Kalkine TV. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back. This is Sage. Let's take a look at more of those leading ASX casino shares to eye in November as part of the Hot Performers Show by Kalkine TV. And let's move on now to the next stock in focus, Tabcorp Holdings. And the ASX-listed Tabcorp is $11.35 billion gambling and entertainment service provider The operator launched an operational review in March, looking at several options, including potentially selling off its wagering in media or lotteries and Keno business. And after this review, which saw online giant Entain bid for the wagering and media business, Tabcorp decided that the best option would be to keep the wagering arm and to spin off lotteries and Keno into a new business. So Tabcorp Chairman David Attenborough said the demerger would turn Tabcorp into two highly successful businesses. And according to Tabcorp's 2021 results, the group's revenue was up 8% from the prior corresponding period. The group EBITDA also saw a healthy jump of 11.3%, and the company paid a final dividend of $14.05 per share. Tabcorp expects its earnings before interest and taxes savings in the range of $20 to $25 million in the financial year 2022. And the last casino stock to look at is Jumbo Interactive. The $1.02 billion Jumbo Interactive is an Australian internet lotteries and gaming company. Lottery retailer Jumbo Interactive has appointed Nigel Atkinson as the UK General Manager as part of its strategy to expand its presence in the UK charity lotteries market. In October, the company announced a final earn-out milestone of $1.9 million from its UK-based subsidiary Gatherwell. According to JIN's full-year results, its operating cash flow was up by 24% and the revenue saw a rise of 17% from the prior year. The company is planning to launch its market-leading lottery platform in the UK during the first half of the financial year 2022. And thank you for your company on that report, but that's all on the Hot Performance today. Keep watching Kalkine TV for all such market and stock-related insights from the ASX, and this is Sage signing off.